Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
PJ. Just a regular thing, just a little bit of a promotion on our side. On the February 15, February 15, 2014, we're doing our stock market outlook and sectors for growth. That's the one that we normally do at the beginning of the year, each year, to kind of set direction with it. I tend to do on the after Chinese New Year, because when you do it in January, you got a bit of sell-off and it doesn't have so much of a momentum. So I prefer to do it always after Chinese New Year to get a bit of bearings and what else people have to say. And I still got another chap in our audience here, Mr. T.Y. Tan, who is a feng shui, his forte, and perhaps he can comment a bit later. I mean, not for the Friday closing bell anyway, for our group over here, which will stretch until 2 to 3 o'clock for our third day follow-up from our main course. So more on the what we call the year of a horse. According to him, his hypnosis is, it's a good year, right, Mr. Tan? It's a good year, that's right. It's a good year for the bull market, okay? The bull market, I'm sure there are some feng shui master will be talking about this on the side of things here, okay? So this is what we are looking at. So we have this February 15, 24th, our market outlook. And what we did this year, we package it together 2 for 1. If you attend the, it's going to be on a webinar. Okay, it's going to be on a webinar. We are doing it on the webinar. We not doing it because then there are more people can come for it. We're doing it together. So if you sign up for the 2014 Market Outlook webinar, then you can also have sign up for the stock investing course. Okay, the stock investing course now, the registration is open now. You can go to the valueinvestor.my website here. So there's a form you can sign up and you can get the Market Outlook seminar, which is we were doing on February 15, plus the 2-month online value investing course, which we just did it at our office, the physical one. So we're doing this over the webinar that you actually will see me talking, and it stretched over a period of 2 months, 8 modules, and both of this, it's a special package where for one price, very reasonable, 249 ringgit, a course plus a market outlook. Is that a good deal? Right, it's a good deal, right? We're doing it over internet, and even if you cannot come on the Saturday on February 14, it will be recorded. So you come back on Sunday, you can play it, and you still can listen it. Okay, so that's something we have the feedback. So that's good. So everything will be recorded. You'll get a login ID. You can view the proceedings in there as much as you can. We try to put it online. The stock pick. So we have an early bird, which is 31st of January 2004. Will be 249. After that, will be 349. So take note. After that will be 349. We do it 249. Okay, we have to pay for a lot of the hosting and things. So the first package is the market outlook. We look at 2004 market outlook and some economic forecasts, what are stocks to look for. All right, and then the package 2 is what we call the 8-module online video tutorial for beginners. We find that a lot of you who is more of value investing or going to be investing with your retirement money, this is something you want to be. We are looking at methods of Warren Buffett and Benjamin Graham. It's basically how we've been managing our funds for the last 10 years. If those of you have been following us for the last several years, we know that even this year we actually beat the accounts. The KLSE market. Our smaller accounts for the EPF, we were averaging 15%. Okay, and for the bigger accounts, which is above half a million, we were doing about 10%. The smaller accounts, we are much better, 15%. Of course, there are some we did not make money also for the EPF, but we didn't lose money. Could be 3-4%, partly it's because they started in 2013. So small accounts, this year for 2013, if you are trading, please look back. Your goal in 2013 was to hit 30%. Okay, that's a 30% account, and I'm sure some of you who have done better than 30%, perhaps 50-60%, you got to look at overall. If you're losing money in 2013, please go back and review back where did you go wrong. It's very important because every year you are your own fund managers. Remember, you are your own traders. You have to be accountable for yourself, and you do that 1 year, 2 years, and if 2014 is another good year and this year you still make money, maybe trading is not something you should be doing. You should be doing something else. Then maybe look into a course like this for value investing, where you can invest for longer term, a value investor where you can put your money and retire rich and well. There are other online courses which is actually done by another provider, I believe, in another financial planning, but they're charging about 900 ringgit. So what we're trying to do is bring this down to 249 ringgit, where the practitioner here is a person in the market, whereas the competitor is a financial planner, a unit trust person. I'm not saying any, but it is out there. So what we want to do is really give this benefit to all our like members, premium members, to enjoy this early bird fee if we can. Here below you can see 2 months video membership. Altogether it's about 7 to 8 hours total module, 150 pages. As a matter of fact, the course material, I actually gave this to Bill to do his value investing, which we did do it for the 10-point CPE, which is part of the Securities Commission. Also, you'll be getting the latest enhanced version of Magic Scanner Plus version 2. Okay, the one on the premium membership is the Magic Scanner 1. This is the Magic Scanner 2, where we'll be talk more about the so-called historical records, value investing and methods. Okay, and finally you get a certificate of participation. As usual, now I'll pass the mic to Bill, but Bill just stepped out of the room. Right, I need to call him for that, and he'll probably talk about gold today. Okay, because gold has recovered back. I'll just get him back into the room in here. So it's a great deal, right? Take advantage of the early bird, 249, an market outlook plus a value investing course, which has a proven method. All right, Bill is in the room. Bill, you want to do a market outlook, Bill, for the Friday closing bell, Bill? Sure. Yeah, okay. Here, over here, Bill. Stand here and talk. Okay, Bill is here. Don't touch the mic. Don't touch the mic. Just talk. Just talk.
All right. Okay, Martin. Bill here, and I'm very happy you guys could come and listen to our market outlook for this round. Now, what I've noticed, there's a dynamic in the market right now that's affecting the whole world, and the dynamic is a dynamic of fear, a dynamic of uncertainty, a dynamic of apprehension, a dynamic of not wanting to take risk, a dynamic of wanting to buy bonds, a dynamic of wanting to buy golds. These are some of the dynamics involved right now. And I've noticed the news flow, watching the talking heads in Bloomberg and CNBC, and listening to some of these fund managers, and how apprehensive they are, how we have to sell all of our Asian shares, get out of Asia, get out of emerging markets, get out of the BRICS, and put our money back into the good old USA and Europe. So I'm noticing this dynamic, and the herd is joining in this thing. For example, if you look at the foreign fund outflows in the Malaysian market, every day money is going out of Malaysia. Foreign funds are selling. However, if you look deeper, there are quite a number of specialist funds, and one of them is Aberdeen Asset Management, who is obviously one of the best Asia funds in the world, one of the best performing funds in the world. Aberdeen Asset Management. And while the crowd is panicking and selling Thailand shares and selling everything in Thailand, selling even the super quality blue chips in Thailand, When the CNBC shows pictures of demonstrators shouting and throwing Molotov cocktails, Aberdeen is buying. And with all of this fear and panic and foreign funds selling, Aberdeen and some others, Fidelity Asia Pacific, are buying. So what do they know that the crowd doesn't know? Well, I'll share one thing with you. The guy who is the rabble-rouser in Thailand, I don't know how to pronounce his name exactly. I think it's Suthep or Suhip or something. I forgot how to say it because these Thai names are very complicated. But he said this. He said, yeah, I want to change the government, but I will not interfere in the businesses which are driving Thailand. For one, semiconductors. Thailand has the biggest semiconductor manufacturer in the world. Suthep says, I'm not going to bother these people. They're bringing money into Thailand. Toyota, the number 2 or number 3 auto producer in the whole of Asia, does their business in Thailand. They're adding another 500 million or billion maybe, I forgot how much it was, to expand their facilities and plants in Thailand. So things are not as bad as what you see on the news. But Joe Public, he's the guy who follows the news and listens, like he's listening to the Pope of Rome as to how wonderful things are, or how bad things are, and they take things as a gospel. But when you get down on the ground, it's not like that. My neighbor is in the tire business. He has a factory up in Thailand, manufacturing tires, and one of his plants is in Bangkok. He says, hey, no problem. My company keeps producing the tires or selling the tires. There's no problem. Demonstrators haven't bothered me whatsoever. So don't follow the crowd. And don't get out of Asia. Asia is still growing. Growth rates are much higher than in Europe and in the U.S. and the developed world. So you get the growth. And you don't get the government interference. In fact, in Thailand, for example, they don't have subsidies except for rice. But they don't subsidize petrol. They don't have all these entitlement and welfare programs. And the government basically leaves business alone to do what they want. So most Asian countries are like that. So that is where we allocate our resources. But if you go to Europe, you go to the U.S., you can criticize the government. However, you have an army of government inspectors interfering in your business, bothering you with all kinds of permits and restrictions and taxes and